The local bourse looking set to benefit from a positive global session this morning. Sentiment has improved in the wake of the U.S. Federal Reserve minutes, which have indicated the possibility of a pause in the interest rate hiking cycle later this year. Now, Matete Thulare is the head of foreign exchange execution at Rand Merchant Bank, joining us now to dissect some of the market moves. Mr. Thulare, thank you very much for your time and your patience while we wrapped up on that tragic story. Let's pick up on the performance of the JSE in early trade. Talk to us about the Rand firming after a weakening, should I say, on the back of the U.S. Fed minutes.
Morning, Collie. I think it's been a very topsy-turvy week. I mean, already yesterday, there were concerns about Chinese growth already on the back of the Chinese premier warning us about the economy as it comes under severe strain from the COVID-19 outbreaks out in China and the lockdowns that we've been seeing there. There's also been suggestion that the government's growth targets could now be moving further out of reach. Now, this is raising concerns that the choking supply chains will obviously weigh on economic growth. I mean, China is the second largest economy in the world. So markets really need a sign of Chinese stimulus and obviously an economic rebound. And this morning we've seen the Rand consolidate and we're waiting for further direction. I mean, we started this morning at 1570. The next key level that we are looking out for is that 1560 level. That is the key support line if we are to see the Rand strengthen any further. But as you said, a lot of market analysis this week has been on the back of the Fed minutes. It is clear that they plan to hike by 50 basis points in June and in July. There is talk about them becoming restrictive in terms of their approach over the next 6 months into the close of the year. But it looks like markets are really unfazed. So I think if anything, it's going to be a wait-and-see approach for the Fed, for the local Reserve Bank out in Pretoria, and also the likes of the ECB to see how things play themselves out from a global perspective. Yeah,
let's continue the conversation around the commodities. I mean, you're looking at gold that is looking set to be heading towards weekly gains, while oil staying near highs amid the prospect of that EU ban on Russian oil supplies. Talk us through those developments.
I mean, but if you think about it, oil is the big story, especially locally, because I think, if anything, it's going to hit the consumer. I mean, already there are rumors and, kind of analysis that next week we will be seeing close to a 4 Rand increase in petrol prices. Now, that is going to obviously hurt the consumer, and obviously that's going to stoke inflation. But other than that, I mean, the oil prices are hovering near a 2-month high this morning, with Brent oil on track for its biggest weekly jump in over a month and a half. As you say, this price increase is supported by the prospect of an EU ban on Russian oil. And also, it's also helped by the coming summer driving season out in the US. Now, the momentum in the oil is really bullish, with many factors pointing to a tighter market and higher prices. I mean, that's also on the back of the EU ban of Russian energy. I mean, already the European Commission is continuing to seek unanimous support of all 27 EU member states to propose new sanctions against Russia. And the only country that's holding out is Hungary. Now, that's posing a stumbling block because Hungary has said that the country needs 3 to 4 years to shift away from Russian crude oil, and they need to make huge investments to adjust the economy, and that could also now delay this whole progress. And obviously, they need to agree on all these issues. So oil is, close to that $120 a barrel price, but also, as I said, I mean, the further this plays itself out, the more it will hurt some of the countries like ourselves who are oil importers, and obviously will hurt us next week as we go to the fuel pumps to fill up.
Yeah, it's a difficult position, not just for us, but those European countries who still depend on the Russian oil. Let's talk company news. Nedbank posting a voluntary trading update This morning, how are their numbers looking?
I mean, it's evident in the first few months of this year. I mean, the operating environment remained really supportive for a lot of South African banks and also their clients. This has been driven by firm economic activity, the moderate credit growth that we've seen, and also slightly higher interest rates that obviously play into their balance sheet. But much of the momentum has really come from robust consumer spending. I mean, you've seen that even in the likes of Mr. Price yesterday when they released their results. Obviously, the retailers looking good there, but that's also been underpinned by some higher household incomes and also the fact that we've been enabled by limited COVID-19 related restrictions. At the same time, we've also seen export growth holding up relatively well, supported by the firm global demand that we have seen and also the elevated international commodity prices. Now, the financial performance for the first 4 months for Nedbank till the 30th of April this year compared to the first 4 months of last year, that reflects a really robust net interest income and also non-interest revenue growth. So I suppose all in all, not too set of better results from Nedbank.
Let's conclude with Pepco releasing its interim results for the 6 months, which ended on the 31st of March. How have they fared?
Look, I suppose despite the higher base in the comparable period, I mean, they've achieved another commendable set of results for the 6-month period that ended on the 31st of March of this year.
Yeah.
If anything, Pepco is a defensive business model. It's got a really unparalleled position within the South African discount and value sectors. I mean, they continue to drive growth, and they obviously underpinned by the resilient performance despite this challenging operating environment. I mean, they've delivered some really strong results. We've seen about 3.3% growth in revenue for this period to about 42 billion rand. And also we've seen about 19% growth in operating profit as well. The other nice thing from their operating model is the fact that they've opened up 144 new stores and also they've also added an acquisition of a Brazilian value retailer. Now that is also being completed. Now this represents Pepco's entry into the Brazilian value retail market, which also holds long-term growth prospects for them, potentially for the group. And I suppose if you think about it, it's not the only South African company that is venturing into South America. I mean, you are seeing even some of our mining counterparts also going into the likes of South America. So it just shows you that there is a lot of value that they see, and obviously they are investing in some of these continents, obviously for the long-term gains.
Matete Thulare, let me thank you for your time, sir, and indeed that markets update. He is the head of foreign exchange execution at Rand Merchant Bank. Thanks indeed for your time.